Common stock versus preferred stock is a crucial concept for investors to understand when it comes to investing in the stock market. In this tutorial, we will break down the key differences between these two types of stocks and provide practical examples to help you make informed investment decisions. First, let us start with common stock, which is the most common type of stock and represents ownership in a company. Common stockholders have voting rights and are entitled to a portion of the company's profits in the form of dividends. However, they are last in line to receive any assets or income if the company goes bankrupt. On the other hand, preferred stock represents a higher claim on assets and earnings than common stock. Preferred stockholders do not have voting rights, but they have a higher priority when it comes to receiving dividends and assets in the event of liquidation. Preferred stock typically comes with a fixed dividend rate, and the dividend payments are usually made before any dividend payments are made to common stockholders. A key difference between common and preferred stock is the level of risk involved. Common stock is generally considered to be more risky than preferred stock because common stockholders are last in line to receive any assets or income if the company goes bankrupt. Preferred stock, on the other hand, is considered to be less risky because preferred stockholders have a higher priority when it comes to receiving assets and income. Another key difference is the potential for long-term growth. Common stock has the potential for long-term growth because common stockholders are entitled to a portion of the company's profits and can benefit from any increase in the company's stock price. Preferred stock, on the other hand, typically has a fixed dividend rate and does not participate in the company's growth to the same extent as common stock. In terms of best practices, investors should carefully consider their investment goals and risk tolerance before deciding between common and preferred stock. If you are looking for long-term growth and are willing to take on more risk, then common stock may be the better choice. However, if you are looking for a more stable income stream and are willing to give up some potential for long-term growth, then preferred stock may be the better choice. Ultimately, the choice between common and preferred stock depends on your individual circumstances and investment goals. By understanding the key differences between these two types of stocks, you can make more informed investment decisions and achieve your financial goals.